they have what's called short squeezes, and they can really drive the price up. You can check certain. Each stock has what's called a short interest. It's a percentage of, like, let's say 10% of the shares are short. Like of all the people that are in the stock, they'll keep track of like a percentage of how many people are betting against the company. The short interest might be like 10%. So 10% of the people in there are shorting the stock. And when it starts getting up around 30%, 40%, you have what's called short squeezes, to where it's like a bunch of people might have shorted the stock right in here, and then they would have like set their stop. So let's say I shorted right here. Well, I would have said, well, I really, if it goes back higher than this level right here, I want to get out. So I would place a limit order, to where that's my max loss. And the trouble is, some news comes out and the stock starts to shoot up, and well, it hits that level, and then my order gets triggered. So all of a sudden I'm buying the shares back. All the people that had shorted it there, they're buying their shares back, and then that caused it to go even higher. And someone else, they might have, had their order set up here to where that's their max loss. So then their order goes off. And it kind of, simultaneously, all these short orders, all the shorts, it's called a short squeeze. They all kind of get squeezed out. It can, all of a sudden it can cause a big move. And and long investors, learn how to spot them and learn how to take advantage. A stock can be on short sale or restriction. Here's the U.S. Securities Exchange Commission kind of explains it. I'll leave this up for a second so you guys can sort of read it for yourself. They probably explain it a little bit better than I do. You guys can read and see that. A lot of times, especially us day traders, we go off of scanners. Like I know, Trade Ideas is a really popular one. Every day, you look at the scanners and you look at the gap scanner, and certain stocks might be shooting up 50% or 100% or even 2, 3, 400%. And a lot of times, you gotta go to short, and there aren't even any shares available. Everybody else, the broker's out. Somebody got to it before you did. So that's something you gotta keep in mind. It pays to be early, early to the party for that. There could be additional fees to short. Different brokers are different, especially if you're holding a while. You might. It shouldn't normally, with most U.S. brokers, it shouldn't be anything too. Like, it wouldn't be anything that would talk you out of what you wanted to do with the U.S. So with offshore brokers, some of the smaller ones, the fees can be a lot higher. However, they might let you do stuff that you wouldn't be able to do to do here. They might give you a lot more leverage, or there'll be some sort of incentive, for that. But the fees, there tend to be more fees with short selling. Shorting penny stocks. Most short selling stocks, normally they'll be worth a few dollars or something before your broker lets you short them. I think E-Trade lets you do it over. I really don't remember, but I know there's brokers out there that'll let you short penny stocks, like stocks just trading for a few cents. I'm not sure about this, but I think you have to have for instance, if you were shorting $1,000 worth of stock that was just worth a few cents, you might have to have $20,000 tied up just to short that $1,000 worth of stock. I'm not 100% sure about that. I probably should have looked at that before I made this video. But it can really tie your money up like that. If you can't find any shares to short, you can use options. You can use puts. That's I don't really recommend that new traders get into options because the time decay can get at you, and yeah. Oh, options are a whole other video. But yeah. So that's the gist of short selling for you. Yeah, so this is Roy with Olivon Investments, olivon.com. If you're welcome to email me. I'll leave a link in the description. Yeah, so thank you for checking out our videos. Thank you.